Hello, traders, and welcome to PL Capital's Market Review. Today is Friday, April 7th. Markets are closed for Good Friday. I'm your host, Paul, and in this video, I solely want to look at natural gas because there's a lot of data and charts to look at. So let's go. All right, so I've got some bad news, some good news, and some potentially more bad news. So let's look at this report. So Europe for the close of the 22-23 heating season is ending with their storage at 56% of gas remaining. So that's not real bullish. But here's a kind of interesting chart. This shows the gas storage for the last going back to 2018. So the yellow line shows where their current gas storage is, and it overlays the blue line, which is 2020. So 2020, obviously, at this time of year, world was in lockdown because of COVID. So gas storage is right where we were at that point, and that's not really good. All the previous years, their storage levels, here's 20% back in 2018. And then the other years, it's somewhere, about 28 up to about maybe 45% full. So we're up here at the very top recent, the highest it's been recently at 56%. So that's not good that Europe's not going to need as much natural gas to resupply themselves as usual. So that's going to weigh on the price of natural gas for sure. All right, but the other thing that we can also look at is the U.S. Underground storage that I've been looking at. And here's the blue line, and I've been saying, it's buttoned right up against this 5-year min max range. But, as you can see, this blue line now, it's really starting to get pretty steep going down. And now we're pulling away from the top of the range, getting a little bit closer to the median. And at this time of year, the median now, it actually starts to come up, but this blue line is still going down. So it'll be interesting to see the next couple weekly inventory numbers that come out, if they can, I don't know, maybe burn some of it off. I know they do that sometimes before they start injecting more. Maybe they can do that to try to get this blue line closer to the 5-year average. We'll see. That'd be nice. Give a little relief to net gas prices. So we'll keep an eye on this this split here. And we can also look at rig counts. So now for the last 2 weeks, gas rig counts have, slowly, real small decreases, but at least they're not pumping up the rig counts. So that's going to help. Also they're decreasing a little bit of oil rigs too. I would assume that they might be doing that in response to OPEC cutting, that they know that they need to maybe cut too. So maybe all in all, this will, they'll slowly actually decrease the rig counts. So we'll keep an eye on that too. So so we got two potential bullish things going on here. We'll see how that plays out in the markets. All right, let's look at the charts. All right, let's look at that 4-hour chart of net gas. And if I zoom out, I still see this as, I think this is an A and that's a B. And then you got 1, 2, 3, here's that expanding flat 4. And we're in the process of making the fifth wave down. And so in this fifth wave, I see leading diagonal to here, running flat for 2. So that's 1, 2. And then you've got, this is all third wave now. So 1, 2, 3, expanding flat for 4. And the fifth wave's not done yet. And it's a little hard to tell. You know, they came down to here, shot back up, and then you had that huge gap last week. And so it's hard to tell. To me, it looks like it's just 1, 2, 3. But with this gap, I mean, I don't know, is it like, are we supposed to assume like maybe there's a 3, a 4, and then they came down for 5, you know, so that's an impulse, and then this was all correction, and then they broke the low again. It's hard to tell, you know, so either way, even if that's an impulse, nat gas isn't done yet. So, because I see, you know, 1, 2, 3, 4, and even if that's 5, that'd be 1, 2, that'd be 3, and then you had this correction for 4. So that was 3, maybe if that's an impulse. We still don't know. And if this was just a correction for 4, all I see right here is just 1, 2, and 3 waves, and we need 5 waves for the fifth and final wave. So, you know, they came back up. So, you know, I'd assume that they're going to come up maybe a little bit more. Maybe it doesn't. You know, that's actually I do see 3 waves already. So that could be high enough, and then they're going to come and break the low at least one more time. That's the best case that I can see. That if this was an impulse down, then that was 3. So 1, 2 came down for 3, correct for 4, and then they'll come back down for 5. Break the low one more time. Worst case is that they're making like a diagonal here, and then man, natural gas is going real low. That'd be 1, 2, 3. That'd be 1, and then this is 3 waves for 2, and then maybe this is 3 way. Yeah, that could be 3, and then they're going to come up in 3 waves for a 4, and then still come back. But this looks like it's going to be an impulse to me, which means if this is a diagonal, that's 1 and that's 2, then this is just the first part of the third wave, which, wow, and I mean, natural gas is going down to like 1.8 or something. So, yeah, I don't know. It's not looking real good. So, but I do expect, you know, they got to come in and break the low at least one more time. That's best case scenario, that they just break it one more time, and then that's 5 waves. But we'll have to wait and see once that gets broken, what's the reaction, you know, because is that just an impulse, and then they're going to correct and still drop more? All right, so the other thing I want to point out is there's 2 very different, let me go out to a daily, 2 very different. So this is just the current contract in futures, the May contract. And so to me, this looks, I'm hoping anyway, that this is A, B, and then you got, this is 5 waves down to here. So that's, you know, now we need a C wave. We need 5 waves for C. So here's 1, 2, 3, 4 up there. And then we're coming down for 5. And that'll be 5 waves, and that'll be the C wave, and then we'd be done. But looking at the continuous contract, and it's got a very different structure, and it's got me wondering what's going to happen here. So here's the 1 and the 2, but on the continuous contract, then you've got 1, 2, 3, 4, and they're making 5, but this is all just going to be for 3. Because we got 1, 2, this came down in 5 waves for 3, and then that means it's going to go up for 4 and still come back down for 5. So this is going to be interesting to see which one plays out. Because even if I go like to a spot market natural gas chart, you know, it's got the same structure. So I see this as here's your 1 and 2, and then you've got 1, 2, here's that expanding flat, 3, 4, and 5, but that's just for the third wave. So you got, that was 1, that was 2, 5 waves down for 3, which means we're just going to correct and then still come back down one more, which, given the storage levels, it wouldn't surprise me that we just kind of hang out in this area for quite a long time. You know, they could like just kind of bounce around here in 3 waves up throughout the summer, and then still come down in 5 waves. So we could be here for quite a while before we, and then finally then we'll start to come back up. But then you'll get a correction. So it's like I could see us just hanging out down in here, like under, I don't know, who knows, 3, 4, but just kind of bouncing up and down for quite some time. So yeah, that's what I see. So it'll be interesting to see, like, this says that this is the final wave on the current contract, but all the other contracts, it looks like we're just finishing the third wave. So I'm kind of leaning towards more of that, just given the storage or the supply issues, that we might just be hanging out down here for some time. All right, that's what I see. Hope that all helps. Let me know of any comments or questions. Thanks for your likes and support, and I will see you in the next video. Bye.